This is Let's Talk Energy, your go-to podcast for smart energy insights. I'm your host, Noah Brenner, and each week we're bringing you an inside look at the dynamics shaping the global energy industry through in-depth conversations with our own Rystad energy experts, as well as some special guests. In this week's episode, we're looking at one of the trickiest parts of the energy system to forecast: demand. We're looking at one of the trickiest parts of the energy system to forecast. That's demand. In the case of supply, you've got projects that take years to come to fruition and companies that are updating you every step of the way on their progress. Whereas for demand, it's really the impact of the collective decisions of millions of consumers all around the globe who may not know that their own habits are changing and certainly aren't going to be warning analysts ahead of time about it. And so where do we see global energy demand going through 2040? And what types of energy are going to be most in demand by consumers? How do we see global oil demand peaking, if at all, and natural gas demand? And what does the curve look like following those peaks? And what are some of the wildcards that could push our estimates for global energy demand both up or down? To help us understand the world's energy demand, I'm joined today by Rystad Energy Chief Economist Claudio Galimberti from our Houston office, as well as by Jorge León, the head of geopolitical analysis here at Rystad Energy from Madrid. Gentlemen, welcome.
Thank you for inviting us.
Thanks, Noah. Thanks for the invitation.
Let's talk energy. I want to start at the grandest scale possible, which is total energy demand. Claudio, let's start with you. How much more energy is the world going to need in 2040? And how is that energy going to be demanded? How are consumers going to want that energy?
Thank you for this big initial question, Noah. We are going to need more energy going into the next 20 years than we need right now, and significantly more. We are talking about an increase of 15% over the next 15 years, and this is in terms of primary energy demand. So just to give you some numbers, right? Currently, in order to make everything work in the world, as you said, driving our car, powering our phone, producing everything industrial related, we need 652 exajoules every year. How to go from exajoule to a unit of measure that's probably more familiar in the world. It's roughly 300, a little bit more than 300 million barrels a day of oil equivalent. In 2040, we would need 15% more, so 750 exajoule. It's an enormous amount of energy that we. And this brings me to an important initial concept I would like for us to land on. Mm-hmm. It is energy transition, but it is also energy addition. So we are going to need more energy for sure in the next 15 to 20 years. So that's the key takeaway number one.
Okay.
The other thing that you mentioned is that basically how, right, we are going to provide this energy. And this brings me to the key takeaway number two, and it's equally is as important as number one, which is fossil fuel, specifically oil and gas, will be present and will be predominant for the next 15 years. So they will remain very central to the energy system in our house view. Albeit, and this is takeaway number three. Sorry if I'm giving you all this
good. Let's get it at the top.
Which is the renewables are really accelerating in their uptake. We have seen a humongous, very quick uptake in the past 5 years. This will continue, and this will actually accelerate. And when I'm talking renewables, it's solar PV, it's batteries, and it's wind. We are in a very structural phase of energy transition, which is accelerating. And many of these trends are happening at the same time. So that's why it's so important to have a house view, because with the house view, what we're saying is that, look, We have analyzed all of this energy system as a whole and made sure that we are able to identify all these trends and to also ranking them in a sort of hierarchy, which are the most important ones and which are the ones that are to some extent less important.
So that all of our forecasts are compatible with one another in terms of how that world is going to be looking, say in 2040 or even beyond that. But talk to me about some of the trends that are driving that demand. I mean, what are some of the inputs into this analysis that are helping us to arrive at that 15% figure?
Yes. So the starting point in all this modeling is the understanding of what we call the connectors. So we start with the macro connector. So what is the macro environment that we are seeing right now and we are going to see in the next 20 years? These are things that, along with, of course, the economic activity, determine what we call the energy service demand. So it's energy. An example of energy service demand is how many miles will be traveled in a car in 2040 and in 2050 and so on and so forth. So how much road transportation will we have in the future? These are, from a modeling perspective, what we consider exogenous variable, right? So this is what the world will need in the future. After that, you need to understand how to fulfill that energy service need. And this is how the analysis of the energy sources and the energy carrier comes into place.
Let's talk a little bit about that. But Jorge, did you want to come in on that question there?
Sure. I guess on energy demand, there's a couple of reflections that I would like to share, Noah. The first one is just building on Claudio's point on how much more energy the world is going to need. Let me give you a data point which I think is relevant. Between 2024 and 2040, the world is going to need 100 exajoules more of energy demand. Now, how much is that a lot? Is this a lot or not? Currently, the US, the biggest economy in the world, consumes 100 exajoules. So that is a very interesting data point. So in the next 15 years, the energy demand in the world will increase by another US or 3 times energy demand in India. So this really shows the monumental effort that the world is going to have to take, increasing energy demand while at the same time accelerating energy transition. I think that's an important reflection to put things into context. The second interesting observation, I think, is that energy demand growth slows down very rapidly. Right now, energy demand grows at around, let's say, 1.5% every year. And towards the end of our forecast period, energy demand just grows at around 0.5% per annum. So a rapid deceleration. Now, this is driven by two important factors. The first one is that global GDP also slows down. Currently, global GDP growth is around 3%. Towards the end of the forecast period, falls below 2%. That's one important element. The second important element to take into account is that the energy intensity of the global economy also is reduced. So you need less energy per unit of GDP because the world becomes more efficient using that energy.
So, if I'm understanding correctly, we're in a period of quite rapid growth right now in terms of our energy demand. That could tail off here later on in the forecast period. And we're looking at adding roughly the equivalent of a United States of demand over the next, say, 15 years up through about 2040. But Claudio, earlier in the conversation here, you mentioned the rise of renewable energy. I mean, I do want to understand which sources of energy do we see growing the most to meet that demand. There are some risers and fallers.
Solar PV is the big winner. And the reason for that, so we are seeing this is the source of energy, the source of primary energy is driving the most and is driving the quickest. The reason for that is the competitiveness of solar PV everywhere in the world, but specifically right now in China. The other one is wind, albeit the rate of growth is not comparable to that of solar. And batteries become extremely important because these two sources of energy are actually intermittent. Therefore, they do represent a problem in managing the grid, and in also a problem when it comes to the security of energy, the security of supply. Therefore, in order to have this growth in solar, we need to have a almost equivalent growth in battery and in energy storage. Now, what are the sources of energy that are actually dropping? That's coal. So
Okay.
coal is something gonna give because, of course, the rate of growth is significant, 15%, as we just said, the equivalent in the United States. But the coal is actually dropping by almost half between now and 2040. And that is driven by the market forces. So it's not so much driven by policy. And this is another very important takeaway. In all our modeling, what we do is to look at the forces that are pushing these energy sources up or down, and it is the market forces that is driving the uptick in solar and in renewables.
So, as you mentioned earlier, this is not simply energy addition. This is also transition, where we do see a rise in energy sources such as wind and solar, and that is a corresponding decline as well with coal. But now I want to talk about, it seems like when we talk about demand, the thing that people want to talk most about is peak. Peak oil demand, peak natural gas demand, and then of course, if it peaks at all, what does the decline curve look like on the backside of that peak? And so, maybe Claudio, we can start with you on oil. When do we see oil demand peaking? Do we see oil demand peaking? And then, what does that curve look like following that period?
Everybody's asking when is oil demand peaking? It is peaking in the house view. It is peaking in the early 30s. And there is a very important reason for that, which is the largest market for oil demand growth of the past 20 years, China, is actually electrifying transportation at a very, very rapid pace. So this source of oil demand growth is no longer going to be there. And of course, you have oil demand is a complex beast, if you want to call it. It's not just one sector. It's 12 different sectors. They all come with different sources of the different energy service demands. But road transportation actually represents 40% of oil demand. And road transportation, besides China, is also seeing a relatively rapid electrification, for instance, in places like Europe. Therefore, the expectation is that by the early 2030s, we will see a peak in oil demand at around 107, 108 million barrels per day. So still we can see a growth of between 3 and 4 million barrels per day between now and then. But then, and this is also important to note, we'll not see a fall off the cliff. So there's going to be a plateau, and oil demand is still going to be above 100 million barrels per day by 2040. So pretty much a level which is very similar to what we have today. So the resilience, and this goes to the what we put in the headline, so accelerating transition by resilience of oil and gas, has to do with this, the fact that once we reach a peak, oil demand stays at that level.
So perhaps maybe the timing of the peak isn't quite as important as the length of that plateau, as we're starting to think about what's needed to meet global demand. Now, Jorge, I want to switch over to natural gas. I feel like you got the tough one here, in that the forecasts that I see for gas demand tend to have a much larger variation from the top line, where maybe gas demand never does peak, to a trough, where we see gas pushed out by renewables. And so, I've seen wide variations of estimates here. Where do we come down when it comes to natural gas demand?
Sure. Let me just add one little thing on oil, that building on what Claudio mentioned. I'm always very surprised about how much interest it generates when oil demand will peak. Let's say it's going to peak, September 15th, 2032. It doesn't really make much of a difference in the oil market when exactly, let's say the slope of the curve is going to go from marginally positive to marginally negative. What really matters is what Claudio mentioned, is what happens in the grand scheme of things. Is this a rapid fall, or is it, as we see in the house view, some sort of a plateau going forward? That's what really matters, not exactly the day where oil demand is going to peak. And in terms of gas, I think that there is some sort of a broad agreement among forecasters that gas is much more resilient than oil, and that's also what we see in our house view report. We see strong gas demand in the rest of the decade, and in the first half of the 30s, and in the second half of the 30s, growth slows down rapidly, and we reach some sort of a plateau. And this is driven mainly by two factors. Two demand factors that are pushing in different directions. So the first one is that we see growing gas demand in the industry and in the power sector. There's more electricity demand that is going to be fulfilled a lot by solar and wind, as Claudio mentioned, but also a lot by gas as we decarbonize and we use less coal. That's the bullish factor sort of thing. The second factor, which is pushing gas demand down, is actually buildings. Sectoral demand in the building sector is heading down, particularly for two reasons. The first one is the strong and the widespread of heat pumps. And the second reason is that there's a strong policy framework supporting efficiency gains in the residential. Let me give you an interesting data point that highlights how policy support will influence gas demand in the building sector. An average UK household in the early 2000s had an EPC, an energy performance certificate rating of around 56, which is quite low. The latest numbers in 2024, the EPC average score for an average household in the UK has increased to 67.1. So that means that on average, every household is becoming much more efficient, and that has a diminishing impact and a diminishing effect on gas demand. So we have these two sources pushing in different directions. So we think that gas has a strong outlook for the next 10 years, and only towards the end of the forecast period, towards the end of the second half of the 30s, that's when we see some sort of a long plateauing.
Okay, and so we've got conflicting forces, but generally we're seeing upward trend, even if we are becoming more efficient in our gas use. And now, I want to earlier in the program we talked a little bit about drivers of demand. What is driving this increase in energy demand that we see through 2040? And I want to reframe that question, flip the question around a little bit, and talk a little bit about wildcards. What are some of the things that could push our estimates either up or down as we see them unfold in the future? And the first one of those I'd like to talk about is just the macroeconomy and some of the trade turmoil, perhaps, that we're seeing as U.S. President Donald Trump remakes kind of global trading policy through his use of tariffs and certainly the reciprocal tariffs that some U.S. trade partners have countered with. And so how does this kind of trade turmoil potentially impact our views on energy demand? And certainly a wild card could be these tariffs. Trump's tariffs are due to be before the U.S. Supreme Court. So how are we thinking about trade turmoil and demand?
So on the macro perspective, what economic theory will tell you is that protectionism is always associated with more inefficiency, redundancy, and eventually lower GDP growth. This is what we saw back in the 2030s. This is what we saw also to some extent in 2018, 2019, when the first Trump administration decided to increase the tariffs on China. Now, interestingly, what we have seen so far, which is the Liberation Day, quote unquote Liberation Day, was announced April 2nd, right? So this was the big shock, the big announcement shock for the tariffs. So far, we have not seen a big impact on economic activity, or not even on inflation, right? So we need to be careful in understanding that at least in the past 3 to 4 months, all these announcements have not resulted in a significant downturn on the GDP or a significant uptick on inflation. Having said that, I would argue that we need to wait. We need to wait because the reality is that probably the labor market in the United States is already showing signs of weakness, and before long we may see a different outlook. But so far, we have this a little bit of this tension where the economic theory tells you that protectionism, of course, is going to have a downward effect on the economy. But the reality is that for the past 3-4 months, we haven't seen it yet. Of course, protectionism and the tariffs have also very big geopolitical implication. Jorge.
It's a very interesting question. Tariffs and trade disputes will have undoubtedly a geopolitical element. So if you think of a world where it's more fragmented and there's more geopolitical tension around the world, then the issue of energy security becomes critical. And you can think of a world where energy importers, for example, would want to try to limit importing energy from elsewhere to make sure that energy security is put at the forefront of energy policy. So a simple example would be countries would have abundant coal reserves, domestic coal reserves, and because they're trying to accelerate their energy transition, they stop consuming domestic coal and instead start, let's say, importing gas, LNG, for example. That's very, very common in East Asia, for example. But if we are suddenly in a world where it's more fragmented, where there is geopolitical tension, then those countries might prefer not importing gas from elsewhere, but instead start consuming domestic resources, because by definition they are more secure. So what happens is that geopolitical tension will also create inefficiencies around trade, energy trade around the world, and could have a significant impact on the speed of the energy transition. And also, you might think, as Claudio mentioned, that energy trade tariffs would have a long-term impact on GDP growth, and that might mean that there is less funds for investment in the energy transition. So, very, very important question. And if we continue in a world where it becomes more fragmented, countries might definitely start imposing what they called an energy security premium to energy imports.
No, it's a really interesting couple of wildcards there. I mean, so we've got both, a more fragmented world should lead to potentially lower energy demand because we've got less efficiency in the system, but we haven't necessarily seen that yet from the tariffs. And while we see coal declining quite rapidly, perhaps over the next 15 or so years, there is potentially a role for geopolitics to keep coal demand perhaps higher than might be economically rational. And so I think two really interesting ideas there. Claudio, did you want to jump in on that?
So one thing we need to bear in mind is that China is really the superpower. We can call it the renewable superpower. The same way we can call Saudi Arabia as the oil superpower. China is the renewable superpower because most of the supply chain for solar PV, batteries, and wind actually is produced there. This means that one of the potential victim of the rise of protectionism can well be the energy transition. So just imagine a situation in which the Chinese electric vehicle cannot be sold in Europe or in the United States, where solar PVs are taxed, the tariffs are extremely high. You can see how the speed of the transition is actually slowed down. Might not stop, but it can definitely be slowed down. So this is what we said is that the protectionism is a downside risk to the energy transition.
Earlier in the program, we mentioned demographics, and I think there's some really interesting things in the report around demographics. Now, certainly we're seeing population growth slow. But it's not simply that there might be fewer people in the world than we thought that there would be, say, 20 years ago. It's the makeup of those people. And so, how are demographic shifts changing our outlook on demand, and where could there be potentially some wild cards, some interesting things happening there?
It's clear that the world is undergoing a demographic transition, same as we're going through an energy transition. We're also going through a demographic transition, and that this is clearly seen from the fact that population growth clearly slows down. Back in 2000, population was growing at around 1.5% every year. Right now, population growth is less; it's around 0.5%, and this is mainly driven by the rapid decline in fertility rates in the industrialized world. In most of the industrialized countries, fertility rates are close or even below the 2.1 level, which is the natural replacement level. So we don't think that there is going to be such a strong population growth in the years to come. So deceleration in population growth necessarily means a deceleration on energy demand. That's the first impact. The second impact, which I think is even more interesting, is the aging of the population. To give another data point, right now 9% of the global population is aged above 65 years old. In 2040, that share increases to 13%. So the world is aging quite rapidly. Now, the interesting element here is how is that going to affect energy demand and sectoral energy demand? And let me give you two examples. The first one is that data tells you that older people tend to drive less. So you will see that there is a negative impact on energy demand. But at the same time, data tells you that older people tend to spend more time watching television, for example. So electricity consumption increases by age, and also heating demand increases by age. So I think that the jury is still out there how aging population is going to affect the energy patterns or the sectoral patterns.
It's a really fascinating aspect of trying to model demand. As I said at the top of the program, a really, really difficult portion of the energy system. But I mean, I feel like no discussion of energy these days is complete without at least touching on AI. Kind of, it's on everybody's lips, across conferences and across the media. But is there a point where the kind of AI data center arms race plateaus, and we see AI switching from a pushing energy demand up from a positive influence to a negative influence on energy demand as it enables the efficiency in grids, in demand side response, or even in autonomous vehicles? How do we see AI influencing energy demand through the forecast period?
You raise a good point there, Noah, because for the most part, we've heard about these data center. They are basically energy hogs. We need to invest more and more because the demand, the requirement for power are ever increasing. But you raise the point that there could be it could be the other way around. What I actually am going to focus on is the expected impact of AI on the overall economy. We should not underestimate the impact of productivity gains that we can have from AI. I'm actually very hopeful there. So a historical precedent is the digitalization, what we saw in the United States and the rest of the world in the 1990s with the rise of the computer age, basically. And we saw a huge increase in productivity back in the 1990s. I remember there was a famous quote by famous economist Samuelson who said at the beginning of the 90s, you could see the productivity gain from computer everywhere but in the statistics. He was just too early because if he had looked at the statistic in 1998, he would have seen a huge productivity growth back then. So the same thing can happen with AI, and that can be the saving grace for global GDP, for global growth, specifically in a society and a global economy where you have fewer and fewer people in the working age group. So I would like to perhaps conclude there on a positive note, because I really do think we are. So today we saw how much hype there is. All the Silicon Valley yesterday was congregating at the White House talking about all the fantastic, if you wish, investment that Silicon Valley is making in the United States and elsewhere in the world. But we are on the cusp of that. So we need to be aware AI will likely revolutionize not just the energy system, but the entire economy.
Jorge, any parting thoughts?
No, I agree. I mean, this is something that, I mean, the most recent precedent is the internet in the late 90s, and we saw that increase in productivity. The question there is, what is this increase in productivity going to mean for the global economy, and is this going to be a technology that is going to be easily diffused around the world, or is it going to be like the internet, where clearly the benefits were firstly seen in Europe and in North America, and then it was only after a few years that was diffused to the rest of the world? That's still to be seen, and how the developing world will benefit from that new technology. In the case of the internet, it was years down the line when they started benefiting from this. So still to be seen, but definitely this is something that is going to revolutionize the energy system, as you mentioned, and also the macroeconomic picture going forward.
Really interesting aspect that you bring up in terms of, so both of you, while AI may make the economy more efficient, it also might make it grow more. And a growing economy, a larger economy, is going to need more energy, although it may not be felt evenly across the world. I think this is a fitting place to draw our discussion to a close. Thank you both for joining me. Fascinating discussion.
Thanks, Noah.
Thank you.
Let's recap. The world's energy demand is growing more rapidly than many had previously predicted. We're going to need about 15% more energy by 2040 than we do today. And the majority of that growth is going to be for electricity that will be generated by renewables. Oil and gas demand does continue to grow, but also does peak. But most importantly, remains resilient through our forecasting period. And so it probably is more accurate to call it a plateau rather than necessarily just a peak. And shifts in demographics and trade patterns, as well as increasingly contentious geopolitics and changing demographics, all have the possibility to shift our view of demand both to the upside and to the downside. Thanks for listening to Let's Talk Energy. This podcast is a production of Rystad Energy, produced by Laura Rodriguez Skaug and Både. Check out the show notes for further analysis on the topics we've discussed today, and connect with us on social media. We're at Rystad Energy on all your major platforms, or you can keep up with us on our website. If you'd like to reach out with questions or comments about today's episode, you can email us directly at podcast@rystadenergy.com. And while you're there, leave us a review, hit that like button, and don't forget to subscribe. But most importantly, please join us next week on Let's Talk Energy.